This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
European Union envoys are on the verge of agreeing an 18th package of sanctions against Russia for its full-scale invasion of Ukraine that would include a lower price cap on Russian oil, 4 EU sources said after a Sunday meeting. The sources said all the elements of the package had been agreed, although one member state still has a technical reservation on the new cap. The sources, speaking on condition of anonymity to discuss confidential talks, said they expect to reach a full agreement on Monday, ahead of a foreign ministers' meeting in Brussels the following day that could formally approve the package.
Oil prices nudged higher on Monday, adding to gains of more than 2% from Friday, as investors eyed further US sanctions on Russia that may affect global supplies, but a ramp-up in Saudi output and ongoing tariff uncertainty limited gains. Brent crude futures rose 15 cents to $70.51 a barrel by 0400 GMT, extending a 2.51% gain on Friday. U.S. West Texas Intermediate crude futures climbed to $68.59, up 14 cents, after settling 2.82% higher in the previous session. U.S. President Donald Trump said on Sunday that he will send Patriot air defense missiles to Ukraine. He is due to make a major statement on Russia on Monday.
Moving on to the top news in the energy sector.
China's June coal imports fell to the lowest monthly level in over 2 years, General Administration of Customs data showed on Monday, as the country's miners ramped up domestic production to replace lower-grade coal imports. China's June imports were 33.04 million metric tons, the lowest level since February 2023 and down 26% from June a year earlier. That was also down 8% from May. For the first half of 2025, imports fell 11% year-on-year to 221.7 million tons.
Electric-powered heavy trucks are rapidly gaining market share in China, driven by subsidies and the quick rollout of chargers, further curbing diesel usage and denting oil demand from the world's biggest crude importer. The boom in electric truck sales in China follows that of electric cars and the rise in recent years of LNG-powered heavy trucks. Those factors, combined with slowing economic growth, have stifled its oil consumption growth. Sales in the world's biggest market for new energy trucks are estimated to have risen 175% year-on-year to 76,100 in the first half of this year, or about a quarter of new truck sales, according to consulting firm Sublime China Information. Next, we have the top news in metal markets. China's rare earths exports rose 32% in June from the month before, customs data showed on Monday, in a potential sign that agreements reached last month to free up the flow of the metals are bearing fruit. The US and China reached a series of agreements in June to get rare earths flowing again after export controls imposed by Beijing in April during the height of its trade war with Washington shuttered some car factories around the world. China's foreign minister said recently Europe's normal rare earths demand could be met. Meanwhile, some carmakers said late last month the elements were starting to flow again, although not freely.
Gold prices touched a 3-week high on Monday, supported by demand for safe haven bullion after US President Donald Trump threatened to impose a 30% tariff on imports from the European Union and Mexico. Spot gold was up 0.1% at $3,359.69 per ounce, as of 0637 GMT, after hitting its highest point since June 23 earlier in the session. U.S. gold futures rose 0.3% to $3,373.30. We are seeing safe haven demand coming back into the picture due to this uncertainty on the implementation of U.S. global trade tariffs policy, Oanda senior market analyst Kelvin Wong said.
We will now look at the top news in the agricultural sector.
China's soybean imports hit the highest level ever for the month of June, a Reuters calculation of customs data showed on Monday, driven by a surge in shipments from top supplier Brazil. The world's largest soybean buyer brought in 12.26 million metric tons in June, up 10.35% from 11.11 million tons a year earlier. June's import surge was fueled by a strong Brazilian harvest and increased buying of Brazilian beans amid ongoing China-US trade tensions, said Wan Chengji, an analyst at Capital Jingdi Futures.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.